Good morning, good morning, good morning. It is Thursday, the 31st of July. The month is gone. It's disappeared. We're in August tomorrow. Oh my God. You join me and the magnificent Mr. Michael Brown, where we will be giving you a preview of yesterday's action in the markets, a preview of today. A review of yesterday, preview of today. But before we do, let's crack on with the legals. Nothing discussed on the Space Session constitute trading or investment advice or infers any kind of endorsement by PIQ, myself, Ryan Paisley, or indeed Mr. Michael Brown. Hello.
Good morning to you, Ryan. Good morning, everyone. Special good morning to young Zach for gracing us with his presence on the rare occasion that he does.
You love to see it. You absolutely love to see it.
Well, I'm just getting that in early because I'll get moaned at in my messages if I don't give him a little pat on the head.
You leave my Zach alone. What's been occurring, my dear friend?
Oh, fuck me, mate. Where the hell do we start this morning? There is plenty going on, as I get called at by a colleague walking past the meeting room for no apparent reason. Where are we this morning? Well, let's start with markets, just to set the scene. We did have some early gains in the equity complex yesterday with, the S&P up by about 0.5% intraday. Those then fizzled out over the FOMC press conference with the market closing pretty much flat. And then we had a big pop higher in futures after hours yesterday, which has extended into early trade this morning with the S&P future up by about 1% as I speak. And that came after very solid results from both Meta and Microsoft after the close yesterday. With the scene set, let's break things down in terms of catalysts from the last 24 hours or so. We may as well start on the monetary policy front with the FOMC. They, of course, maintained the target range for the Fed funds rate between 4.25% and 4.5% at their meeting yesterday, bang in line with consensus expectations. We did, though, see Governor Bowman and Governor Waller both dissent in favour of a 25 basis point cut. That dissent, though, was one, incredibly well telegraphed, and two, does not represent anything like a majority view on the FOMC, so it is, in my view, not particularly significant. Also, just in terms of a little bit of housekeeping, Governor Kugler was absent from the meeting due to a personal matter. In terms of the Fed's policy statement, it was pretty much a cut and paste of what we saw issued after the June meeting. The only significant change was the description in terms of economic growth. Having previously described the economy as growing at a, quote, solid pace, the FOMC now notes that the pace of growth moderated in the first half of the year. All of the other descriptions of the economy were pretty much unchanged. Unemployment still low, labour market conditions remaining solid, and inflation remaining somewhat elevated as the committee remain attentive to risks on both sides of the dual mandates. The committee also noted that uncertainty remains elevated. A little bit of housekeeping there. They removed reference to uncertainty having diminished. That's not a policy signal, to be honest. It's just a grammatical change that is not worth reading too much into. Fed Chair Powell at the post-meeting press conference, again, pretty much bang in line with expectations, noting that policy is well positioned and that the economy is growing at a solid pace. He was also noting again that the Fed is well positioned to learn more before adjusting their policy stance, although Powell did very, very slightly start to push the door open to September being at least a live meeting. Not necessarily saying they're going to deliver a cut in September, by no means am I saying that, but he was opening and raising the prospect of September being, shall we say, a more interesting meeting than we had yesterday by saying that the FOMC will receive, quote, a good amount of data in the coming months, and that in September they will be asking themselves whether the Fed funds rate is in the right place. Of course, the direction of travel for rates remains to the downside. This really is nothing new, to be completely honest with you. I think the base case really remains the same. If we have inflation continuing to move higher over the summer and the labour market remains resilient, then the Fed have every reason to continue with this patient wait-and-see stance. If we see the inflationary impact of tariffs somewhat lesser than we expected, or if we see the labour market begin to weaken, then the Fed have enough room to manoeuvre to actually take a more dovish turn as the autumn gets underway. So Powell, in short, yesterday saying we will start to thinking about doing something with rates in September, but for the time being, go and enjoy your summer break and I'll speak to you at Jackson Hole. The market did take that somewhat hawkishly in a bit of an odd odd way. We did see quite a significant sell-off at the front end of the Treasury curve, the 2-year yield rising 7 basis points on the day, and actually the swaps market now pricing about a 45% chance of a September cut. That is down from about 65% before the Fed decision yesterday, although I would say that actually having it basically 50-50 is probably fair in my mind. In terms of other policy decisions, we heard from the Bank of Canada yesterday. They held rates steady at 2.75%, although they did leave the door open for further rate cuts if the continued weakening in the economy puts further downward pressure on inflation. Of course, Canada facing the potential of a 35% tariff on non-US MCA goods as soon as Friday. And overnight, we have heard from the Bank of Japan, the BOJ. They kept all policy settings unchanged, holding the main policy rate at 0.5% in what was a unanimous vote, and again reiterating that they will raise rates further if their economic outlook is realised. They also increased their core CPI forecast for both FY26 and FY27, again bang in line with the sources stories that we had in the run-up to the BOJ meeting. Away from monetary policy, it was another busy day on the trade front. We heard many times from President Trump, both yesterday and overnight. In terms of what Trump had to say, he was talking firstly about the 1st of August tariff deadline, which, for those of you who are unaware, is tomorrow. He said, and I quote, "It stands strong and will not be extended. August the 1st is a great day for America." So it seems like taco time might not be coming around just yet. He was also threatening a higher tariff on India, saying that India will pay a 25% tariff from the 1st of August, plus a penalty on top of that for their various dealings with Russia, not just in terms of crude, but also in terms of various military purchases that they make from Russia as well. Sticking with the tariff front, we also had a proclamation from the White House yesterday, which was signed at the same time as the FOMC decision. You can't tell me that was not a deliberate move from the president. This proclamation imposed a 50% tariff on imports of semi-finished copper products and copper-intensive derivative products, effective on August the 1st. The key takeaway from this is that, and I'm no expert on copper, so I'm relying heavily on Bloomberg and News Squawk here. The key takeaway is that Trump excluded refined metal from this tariff. There were basically more exemptions than the market had been expecting, which is why we saw that 18-20% plunge in New York copper prices yesterday, and actually in very early trade this morning. New York copper now trades below LME copper. So everyone who was in on that widening spread trade, either they got out at the right time or they have now been absolutely steamrolled on it. We have had a trade deal announced overnight between the US and South Korea. That's going to be a 15% tariff on imports from South Korea, including autos. It feels like 15% is the new 10% at this point. That was the tariff rate for Japan. It was the tariff rate for Europe. It's the tariff rate for South Korea as well. It feels like that's kind of becoming the baseline metric at this point. The one thing we didn't hear yesterday, despite having been guided that we would hear about it, is this China trade truce. We were told that Bessent and Greer were going to be briefing Trump and that he would be making a call on whether to extend the current truce yesterday. Well, unless it hasn't been reported anywhere, it seems like he didn't actually make that call. So we are still waiting to see what happens with that trade truce. Of course, that is currently due to expire on the 12th of August, although you would very, very much expect that that gets extended once more. In terms of other bits and bobs from yesterday, may as well cover those mega cap tech earnings that we had after the closing bell yesterday. Microsoft delivering top and bottom line beats, also beating on the all-important intelligent cloud revenue line. That's basically AI for people who don't work in marketing. Microsoft shares trading as much as 7% higher after the close yesterday. Meta also delivering a very, very solid set of results, beating on both revenue and profit. EPS coming in at $7.14, well above the $5.89 that had been expected. Meta also upping their Q3 and their FY revenue guidance And as a result, Meta shares trading as much as 10% higher in the after-hours session yesterday, and those moves in turn dragging futures higher, as I mentioned a moment ago, and in fact dragging the Nasdaq 100 future to fresh contract highs as I speak this morning. Other catalysts from yesterday, just to make sure I haven't missed anything, we did have some data, of course. GDP growing by 0.1% on a quarter-on-quarter basis in Q2 in the Eurozone, marginally better than the stagnation that had been expected. But remember, this data is very, very skewed by the effects of all the tariff front running that we saw in the first 3 months of the year. So I wouldn't be reading especially much into the figures. We also had GDP out of the States yesterday. The US economy growing by 3% on an annualized quarter-on-quarter basis. That was well above the 2.6% consensus. And of course, the president decided to say that because GDP is way better than expected, that means that Chair Powell should cut rates. So some poor White House intern is going to have to go and explain to him that that is the opposite of how this whole thing works. Other notable things from yesterday, the Treasury, their quarterly refunding announcement. They kept auction sizes steady between August and October. They also reiterated their guidance that they are going to see steady auctions for, quote, at least the next several quarters. They did, though, double the frequency of nominal buybacks at the long end of the curve. Unless your name is Zach Eisman, then that is not particularly exciting for anyone, to be completely honest with you. And lastly, I believe, just one last thing. Amazon, apparently they're going to be paying somewhere between 20 and 25 million bucks a year to the New York Times. This is some sort of AI deal that they have struck. The reason I mention it is because even my bare bones understanding of this sort of thing is that AI models need to be trained on data and language, and I wonder whether we're starting to go down a route of basically content producers licensing their content to be used in the training and research of these models as they're developed. So potentially a longer running theme to watch there. But I think that's it from me.
I think that's definitely the way forward, because up until now we've had certain, especially news organizations, have been looking to sue, and I think some have been successful in suing these AI models and whatnot, because they've been basically using the content to teach their models without paying the people that provide the information. So yeah, this licensing to AI seems to be the way forward. And also you could argue, I think it's kind of quite an obvious assumption to make, that's why, well, one of the reasons why Musk bought Twitter, because it's just a great place to, teach LMMs.
The
and that's what's happening with Grok.
The other one that apparently a lot of these AI models have been trained on is Reddit. Apparently, that's all, presumably for similar reasons as to Twitter, just because it's this huge library of content.
What about Mumsnet?
I don't know about that one, mate. To be honest, maybe
what's the scene on Mumsnet recently? Is it any good? Was it getting? You still rocking? Mr. Michael Brown, thank you for that. Let me just rattle through some overnight news headlines from our dear friend Zach Eisman. Do follow him. Do subscribe to the Substack. The best way to stay up to date on overnight news that matters most to markets. Where should we start? Let's start in trade. White House official confirmed Trump's plans to sign new executive orders on Thursday, so that's today, imposing higher tariff rates on several countries that have been unable to reach negotiated trade agreements by the self-imposed Friday deadline. It could include a number of America's biggest trading partners, including Canada, Mexico and Taiwan. Trump said on Wednesday the US will charge a 15% tariff on imports from South Korea, down from a threatened 25%. That's part of the deal to ease tensions with its top 10 trading partner and key Asian ally. China's cyberspace regulator, they summoned NVIDIA on Thursday over security risks related to its H20, whichever way you want to call it. That's gone to a statement. NVIDIA was required to provide explanation on, I quote, backdoor vulnerability. No one likes a bit of backdoor vulnerability. God. I'll move on swiftly. Of its computing chips sold to China, and apparently they've got to submit some relevant documents, etc., etc. So I want to keep an eye on that. Taiwan, they said its negotiators are drafting a joint statement with the US on their bilateral trade deal, appearing to make some long-awaited progress just a day ahead of the tariff deadline. In macro news, Bank of Japan left policy settings unchanged but raised its price outlook, fueling expectations of an interest rate increase as the trade agreement with the US helped clear some uncertainties. China, their official gauges of factory and services and construction activity weakened in July, signaling a potential economic slowdown after resilient growth in the first half of the year. Staying with China, the central banks stepped in to stabilize the yuan with a daily reference rate after the currency dropped to a 2-month low in response to the dollar's surge. Sticking with central banks, we're moving across to Brazil. The Brazilian central bank held its benchmark interest rate steady, pausing an aggressive tightening cycle after 7 consecutive hikes, as widely expected. The US tariffs adding up to policymakers' heightened caution. The once mighty US premium, as Michael mentioned before about copper, the once mighty US premium that's enjoyed by the global benchmark in New York, that shrank to near zero on Thursday as markets clawed back months of gains in hours of frenzied trading after Trump surprised the markets with pared back tariffs. Geopolitical news, Russia attacked Kiev with a barrage of drones and missiles overnight in defiance of US President Trump's 10-day deadline for the Kremlin to reach a truce with Ukraine. And finally for me, just some equity news before I hand back to Mr. Michael Brown. Microsoft, they forecast a record 30 billion with a B in capital spending for the current fiscal first quarter, after booming sales in its Azure cloud computing business showcase the growing returns on its massive bets in AI. Meta, as Michael alluded to earlier on, they posted a 22% revenue growth in the second quarter, showing its core ad business remains strong at a time when the company is investing billions of dollars into AI again. Ford, the motor giant, they've warned profit. Well, they've warned of profit, or lack of, I'm assuming, this year, and we'll see a sharp drop in growing fallback from Trump's tariffs. Fallback? I mean fall out. I don't know what's wrong with me today. Robinhood Markets, they posted second quarter revenue that beat Wall Street estimates, boosted by strength in cryptocurrency trading. And finally for me, shares of South Korean automakers Hyundai and Kia, they fell after Trump said that the US will charge the 15% tariff on imports from South Korea. And this obviously includes autos as part of the trade deal. And that's it from me. Back to you in the studio.
Odd that they would fall on a 15% tariff when the alternative is a 25% tariff, but there we are. Whoever said markets were rational, eh?
Yeah, ours isn't to wonder why. It's a very odd one. I'll tell you what it does remind me of. This is why I've always refused to trade stocks on earnings data. Because the amount of times that if stuff will come in, like beating expectations, and it actually gets slammed. And same with Tesla. Tesla numbers could come out being absolutely dog shit, and the stock will rise 10%.
Yeah, absolutely. It's bizarre, isn't it?
It's always like that, the case we've made many times in the past about the difference between fast money and real money. It's almost like just ignore the first day of trading and then come back 24 hours later and get some real scope of what's going on.
Yeah, absolutely that. Right, in terms of today then, I'll pick up on the tariff line, because obviously there's a few bits and bobs to watch on the trade front, especially as we are now, just under 24 hours away from the 1st of August tariff deadline. I believe that is due, the specific deadline is midnight Eastern time on the 1st of August, so 5 a.m. tomorrow morning for those of us based here in London. You would imagine, or hope, or pray that we will get some clarity on what exactly is going to happen on that front as we move through the day today, whether that be further trade deals being struck. Trump was talking earlier on about a deal, or last night I think it might have been, about a deal with Pakistan involving oil, but he didn't mention tariffs. So a lot of noise on the trade front over the next day or so, to say the least. There may also be these confirmation tariff letters that Trump has spoken about previously. They may go out at some point before that 1st of August deadline. And also the other thing to focus on, of course, is what's going on with this China trade truce. We still don't really know what's actually happening on that front. And it's now, 2 days since those talks wrapped up in Stockholm. The other thing to watch on the tariff front is that one of the federal appeals courts in the United States, they are due to begin hearing the initial arguments in the Trump tariff appeal case. This is going back to the ruling that was made in New York a couple of months ago now around the use of IEEPA tariffs. Basically, does Trump have the authority, or any president have the authority, to just throw tariffs around however he wants to, basically by executive order or by Truth Social posts? Various businesses saying we don't think he does. The lower court siding with those businesses, Trump appealing. whatever happens in this case that's starting today, the result will be appealed. It will go to the Supreme Court. And again, no matter what happens with that, there are various other 4 or 5 other sections of US commerce law that allow the president to impose tariffs, just perhaps not as quickly as Trump has been doing thus far. So again, another sort of noise catalyst on the trade front, but certainly something just to keep a bit of an eye on, even though that's going to rumble on for some time to come. As for scheduled events in terms of economic data, there's a few bits and bobs worth noting. At 10 o'clock this morning, we have the latest unemployment figures from the Eurozone. Unemployment expected to have held steady at 6.3% in June. Then into the afternoon session, stateside at 1:30, we have the latest PCE figures from the United States. Of course, this includes the personal income and spending stats, but we also get the PCE and core PCE deflators, which are the Fed's preferred inflation metrics. We heard from Chair Powell last night, who said that the FOMC expect headline PCE to print 2.5% in June and core PCE to print 2.7% in June. Not only that, we also had the Q2 PCE data out yesterday, so everyone can just kind of back the June data out of that. So it's not likely to be particularly market moving. Also at 1:30, we have the weekly US jobless claims stats. Initial claims expected broadly unchanged at 223,000 in the week to the 26th of July. Continuing claims also expected largely unchanged at 1.953 million in the week to the 19th of July. Note that neither of those prints pertains to the July non-farm payroll survey week, and that July jobs report, of course, is due tomorrow. And the last notable data release today comes at 2:45. That is the M&I Chicago PMI figures. Their index expected to rise to 52, up from a prior 40.4, so that will be back into expansionary territory in July. Do recall, though, of course, that data is released 3 minutes early if you are one of those lucky M&I subscribers out there. And lastly, it's another busy day on the earnings front. Before the market open, we're due to hear from MasterCard. After the market close, we're due to hear from more mega cap Magnificent 7 names. Amazon, they're due to report bang on the closing bell, with options implying a move of 6.1% in the stock. Apple, they are due to report at 9:30 London time, 4:30 on the East Coast. Options there imply a move of about 4% in the stock. Other notable names to report after the close include retail favourites such as Coinbase and Reddit. So another busy day ahead after a busy Wednesday, a hectic Thursday, and then probably a frenetic Friday as well, with the jobs report and that tariff deadline looming quite large.
Awesome. Well, thank you very much, Mr. Michael Brown. Am I seeing you later for a beer? I believe I am.
You might. I need to talk to you about that because I've got a bit of a diary clash, but we can resolve that later.
I'm sure I'm more important. But anyway,
I can't
moving
be in
on.
4 places at once.
Well, you can if you really wanted to. Michael, thank you as always for being your lovely, incredible self. Listeners, likewise, thank you so much for tuning in. We really do appreciate you. Whatever you're doing today, if you are trading, keep it tight. If you're doing something else, stay safe. And yeah, we'll see you all on Friday, tomorrow. Much love.
Bye for now.